What's up, guys, and welcome back to Roguefx. This is going to be our second part to it's going to be a significant amount of videos within this series, essentially building a foundation, a solid foundation that can very much be built upon, and as well as innovated over time. Obviously, as you continue to get better, as you continue to develop your skill, in whichever case, hone your skills, you will be able to have access to more and more opportunity as your trading journey goes by, of course. If you haven't already, hit that like button, subscribe to the channel, because we do aim to post consistently. Or, at this point, of course, when I very much can, or in whichever case, want to. I do appreciate every one of you for very much tuning in. Those who are very much working discreetly to increase their skill and enhance their craft, I commend you. You are very much in the correct place. Just keep going, and obviously continuing to show up for these classes, for these videos, and again, enhancing your potential, because let's be honest, in trading, it's essentially limitless, right? I do offer mentorship through my membership, as well as Rougefx Trading signal services. I peeped a comment earlier today questioning my win rate. Guys, it's important to understand that win rates are very much not important when it comes to trading. It's an ego stroke and it's not real. Guys, I just really hope that y'all are able to get out of your own way. Nobody is counting how many losses that you have had this week. Nobody's counting how many wins you have had this week. It is very much essential to keep track in order to continue to improve. However, guys, let's take the competition out of it and really kind of focus on establishing a firm foundation to create generational wealth for our families, right? It's not that complicated. It's not that tough of a concept to really grasp. You need to get out of your ego. It's just that simple, guys, because these markets are very much built for you to lose. However, with the correct mind frame, as well as being able to very much control your emotions, guys, again, limitless, right? Without further ado, let's very much get started. Before anything, I'd like to very much get our tools. We're going to use 2 dots, of course, for our range, a significant trend line for our liquidity as well as target, and a simple box, square, or, of course, rectangle for a liquidity pool, right? Before I very much do get started, of course, this is going to be XAUUSD, in whichever case, gold, US dollar. Without further ado, let's get started. First thing we're very much going to do is establish our range. We have a weak low, protected high. In whichever case, this high is essentially going to act as, in whichever case, a liquidity grab, right? Because if I draw my fib, we have, in whichever case, a liquidity grab, a tick of our Fibonacci key level, essentially helping us understand how protected this high is. Now, as far as a POI, yes, we very much have a rejection block that is essentially bearish that we can very much use as a significant point of interest in whichever case. And of course, if this acts as a fairly egregious amount of, in whichever case we'll call it a risk, more so risk potential, we can very much redefine it to what? A breaker. What do we have below our point of interest? A significant liquidity grab, essentially going to act as what? A slanted high. This is going to be a phenomenal optimal trade entry where we can enter just right of our internal range liquidity and very much target our external range liquidity, as well as then some, very much continuing our overall range towards the low, right? In whichever case, expansion, correction, expansion, right? Moving on to our next range, price essentially establishes a protected high, weak low. As you can see, as far as a point of interest, we have a significant rejection block being, in whichever case, mitigated, right? Price is creating a QM of whichever sorts, essentially taking out liquidity towards the left, being a slanted high. We essentially continue towards the lows, create a failure, swing towards the highs, and of course, reach for, again, internal range liquidity, which in this case would very much act as a weak high. Fairly simple, guys. Let's not make it too complicated. We can very much take that short, We can very much set our risk, as well as understand that, guys, this is a simple liquidity pool. Take your Fibonacci sequence and very much redefine your stop loss for, that extra boost in not only confidence, but essentially being able to very much risk more while very much targeting where? Your weak low, right? In whichever case, in this case, we very much had, in whichever case, would be a break even. But of course, it's really, if you change your perspective, it very much establishes another opportunity for what? A liquidity grab, right? And in this case, we have an equal high, we have a weak high, and in whichever case, that weak high gets rated, helping us understand what's essentially going on. In whichever case, accumulation, manipulation, distribution towards the lows. Fairly simple, guys. Let's not make this too complicated. This is why it is essential for us to lose, right? So when we lose, or in whichever case this case be a break even, we understand why. Why was it a break even? Well, it was supposed to do that. It's just the market doing the market. It's the market behavior behaving as if the market would be behaving, right? So essentially, it's not picking and choosing whether you want to be in a trade or not. No, it's establishing your range, locating your point of interest, locating your internal range liquidity, and then obviously a significant target, whether that be a slanted, a significant low, a pair of equal lows. In whichever case, guys, we do have trading concepts that we can very much go to after this video, of course, if you were in whichever regard. But guys, again, free of charge, take advantage. Very much educate yourselves on the concept of liquidity as well as inducement, of course. Moving on to our next range, as you can see, really as you can tell as my previous announcement, this is going to act as an AMD pattern, right? Accumulation, manipulation, distribution. Understanding what's happening towards the left is price is essentially rating a pair of equal lows, in whichever case sell side liquidity, or a pair of sell stops. No matter what's happening towards the left, in whichever case a POI, it's very much essential to understand what's essentially taking place, right? We have a protected low, whether it took out a imaginary pair of lows towards the left, we can't see, maybe reacting within a significant liquidity pool towards the left, which again, if we're looking at the charts at this moment, we can't see these things. However, we can very much understand that price is essentially rated a weak low, right? That's very evident in whichever case. We have a protected low being established, as well as a weak high, and really, if we're being honest, a plethora of weak highs, essentially establishing a what? A trend line. And of course, that would be your liquidity, as well as, really, if I'm being honest, a significant POI that we can very much understand as maybe a liquidity void, in whichever case, establishing a significant point of interest to magnetize toward, create that liquidity grab, and obviously continue towards the highs. In this case, right? That's very much besides the point, right? The whole point is understanding that we have a significant trend of a weak high, protected low. We have a reason to believe that this protected low is protected, and a reason to believe this weak high is weak, essentially, right? Now, let's take this imaginary POI that price seems to be reacting toward and really kind of understand what is happening before it, right? Essentially, the move down before the move up, we have a significant bearish rejection block that can be redefined to what? A rebalancing mechanism where we can very much switch over, in whichever case, stretch over, understand what's happening toward the left of our overall, or really above our overall point of interest, which is essentially a significant liquidity grab, my friends. We have a weak high essentially being liquidated, and if that's not good enough for you, my friends, we have a slanted high. But let's start with the obvious, right? And very much we are presented with a significant return to demand, or I mean, if we're being practical or really kind of simplifying what's actually happening, a mitigation of our point of interest, mitigation sequence, liquidity pool, however you want to call it. It's essentially your plan, it's your process, it's your skill, it's basically something you're creating, right, for yourself to, again, establish generational wealth. This thing is, it's simple, guys. It's simple as you make it, of course. That's trading, and I can't necessarily stress this enough, simply because I see people that are very much doing the absolute most and receiving the absolute least amount of results. This is actually going to debunk that actual, like, or we have to use a countless amount of indicators. We have to essentially settle for whatever the market is giving us, not understanding that, guys, the market is giving us plethora of opportunity. There's no need to fear risk or, fear missing out. In whichever case, the markets are here for you, not against you. So let's really kind of understand that. As far as our POI, we can very much redefine to what? Essentially, imbalance close price action inefficiency, in whichever case, a breaker block towards the left. We can very much redefine our risk and obviously risk a bit more or for a bit less, if that makes sense. And obviously target our external rates liquidity or a weak high, essentially really kind of establishing a significant liquidity pool of our essentially, Fibonacci key level, very much targeting our mitigation or fair value equilibrium for a textbook or might I say phenomenal trade entry, my friends. Moving on to our next range. As you can see, my friends, we are presented with a protected low, weak high. Now, I know what you guys are saying. This is kind of a pretty ridiculous, in whichever case, setup within price action, which is perfectly fine, guys. I don't want you guys to panic. It's a simple break and retest price action play. It's, again, as simple as you're going to make it. Now, what do I mean by that, right? As simple as you're going to make it. Well, majority of the times when you're looking for looking at a, we'll call it a full trend in whichever case, we'll take this one as for example. You're actually looking for a expansion, correction, and then overall expansion. Well, in this case, we didn't necessarily get a correction. Instead, we got a break and retest. In whichever case, establishing we'll call it a fishnet entry, where price is going to essentially leave a pool of liquidity for liquidation in order to continue higher. These trades are actually going to give you the bulk of, it's going to give you a lot, essentially, right? Of course, depending on your time frame, but majority of the times it's going to go when it goes, simply because it's essentially taking out liquidity, rating any kind of stops, and very much taking off. And essentially, you're on the right side of the market, correct? So this is pretty much understanding, in whichever case, what are we looking for in our previous range? We're looking for our down move before the move up, right? Well, in this case, we're not looking for the down move before the move up, but more so the up move before the move down, right? In whichever case, we're going to identify our bullish rejection block as a significant POI, redefine it, and very much stretch it towards the left. Now, guys, I know, I understand this is a pretty significant stop loss. It's ridiculous. It's 30 plus pips. It's fine. It's important to understand that your POIs, they are very much formless, which means the volume within any significant POI can very much be redefined. In whichever case, price gave us our last attempt at a liquidity grab, which is essentially going to end up being our last attempt at a protected low, which means that we can very much redefine, or first of all, let's slow down. We can very much understand that this isn't going to be our protected low anymore. Instead, we're going to shift and really kind of understand where price action essentially starts our trend, really kind of avoiding all the noise towards the left. We can very much redefine this to a significant breaker block, price action inefficiency, or, of course, simple imbalance. What is above our POI? We have internal rates liquidity being a slanted low. Fairly significant play, my friends. And I mean, as you can see, we got a significant reaction. And a lot of the times, guys, it's important to understand it's not going to hit your 50. It's not even going to hit your, essentially, if I draw my fib, your key level furthest away. Simply because, I mean, guys, this is going to act as a liquidity grab, and liquidity grabs generally they're not looking to come back, right? So this is understanding that, I mean, a lot of people, of course, would be hesitant when taking this trade, but for very much, I don't even want to say skilled at this point, for very much experienced traders, we can very much redefine our stop towards this, essentially our fair value, equilibrium, key level, and then continue towards the highs. A very much phenomenal trade entry. Moving on to our next range. Really kind of identifying our next range. Guys, I gotta say it. I gotta really help y'all understand and realize that this is the same range that we just previously traded. In whichever case, yes, we have a protected low, we have a weak high. We have our up move regarding our bearish rejection block shadow before essentially the down move. We can very much stretch our point of interest towards the left, understand what's essentially kind of taking place, my friends, right? So again, this protected low is going to shift and really kind of migrate to our most recent protected low and what's just above this quote unquote point of interest. If you're very much counting your Fibonacci key levels, personally, I'll just use the week low of our bullish rejection block, essentially the open, right? To really kind of establish or really understand that liquidity is essentially being liquidated. We are very much mitigating our, point of interest of our bullish rejection block, which of course, guys, again, these POIs are very much, redefinable. They're malleable in whichever case, just dependent, of course, on your imagination. Like in whichever case, this unmitigated wick can definitely be used as what? A mitigation sequence, And at that point, you can very much understand your range, understand your liquidity or, of course, inducement, understand your point of interest, and very much take your trade with the utmost confidence. Of course, not all of them are going to go, not all of them are going to just, continue to the highs. Of course, guys, of course, we have a weak high for, a quick partial in whichever case, or, for a take profit overall, which is very much fine. We're not looking to get the grandest amount of trades, or if you haven't understood this before or before this video, understand that less is more. The more you understand that, the more you will acquire a significant, we'll call it win rate or consistency within these markets. Understand that losses come with this, right? So essentially, it's pretty much assuming, okay, so you broke even on this trade. What's stopping you from essentially taking the next trade? Your confidence, right? What does your confidence come from? Experience. It's just that simple, my friends. And just as much as you were happy at this, maybe 1 to 2, maybe 1 to 3, you got it back and then some, right? That is the beauty of trading. That is the limitlessness of this art. This is why we take time, and we very much value the time we put into it, simply because, guys, this is a special endeavor. This is a special, we'll call it a vocation, guys. What makes this so special is, essentially it's a lifestyle. You're going to have to value your family, your spirituality. You're going to have to value your physicality. You're going to have to value your mental state. Simply because, guys, yes, trading it's simple when you have it. But when you don't have it and you're developing it, it can get trying. It can get frustrating. It's like, I don't like to make this kind of comparison, but yes, it's like a video game. You're going to get mad that, or not mad essentially, but frustrated that you are losing, or that you are not having a good week, a good day, a good window, a good year, a good, 6 months. Like, it's going to happen simply because, guys, you need to essentially ride the waves of life as you understand that, with finances, with relationships, with, in whichever case your mood swings, you're going to have those highs and you're going to have those lows. The key is to find balance and, essentially work through it, essentially, or in whichever case, take a break. It's just take a break. It just makes so much, it just makes it so much easier. And when you come back, don't think, oh, I lost my skill, I don't understand it, guys. As you take a break, you give your brain time enough to really kind of reevaluate what it's learning, what it's developing over time, my friends. And in that time, you're essentially building your retinal activating system and understanding the fact that, guys, opportunity is literally everywhere, right? But again, you have to put in the work. Again, it's not going to come to you easy. Again, it's not free. You're going to have to learn. And a lot of y'all are going to need a mentor. You're going to need a guru. I don't care if you feel like, oh, I'm going to just watch the videos for free. Really, how's that even working out for you? Because, if I'm being honest, taking risk itself, guys, it's a skill set. And if you're not taking risk on the daily and really kind of developing your mental fortitude as far as really understanding what essentially you're doing, it's going to be a tough challenge, and you're going to take so much longer than you would have preferred. This is essentially why I do offer these things. However, for you to take advantage of them, it's going to cost a significant. It's going to cost. Like, nothing in this life is free. I'm sorry. And this is a highly valued skill set that I know you guys want to achieve, need to achieve, deserve to achieve. However, you're going to have to make some sacrifices, my friends. And that's just what it is. I do appreciate every one of you guys for tuning in. I thank God for what I do. I thank God for my gifts. I thank God for the support of my family, my friends, those who are very much, paying attention, listening, supporting from the background, maybe afar, and really kind of understanding the 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 waves of life that kind of I've just been kind of going through. It's not necessarily something in my control in whichever case. So it's kind of like, bro, you're living your life. You know, it's like saying LeBron James would have been better as a football player. It doesn't make sense at this point. This man has what, well over 2, 3 rings, like whole rings, like championships. Like it's just, this is what he was meant to do. This is his life path. This is just what it is, and unfortunately, this is what it is. So again, I do appreciate the patience, my friends. I do appreciate the support, the likes, those who comment down in the comment section below. It is very much seen. I mean, if I'm being honest, most of the questions, I very much answer, as the videos go by. Like, guys, take time to watch these videos. Set aside time, even if it's just one video a day, simply because you're going to train your retinal activating system regardless. And if you're continuously exposing your mind to this information, it's going to happen that much faster for you, my friends. I do appreciate the love and support. Until next time on Jody FX.